AirPods, what they make in terms of revenue is more than what Shopify, Hilton, Snapchat, these massive companies, just from AirPods alone, how much Apple make in revenue is more than Hilton hotels yearly.
No way.
Yeah.
Just on the AirPods alone.
Just on the AirPods alone. We believe that having exposure to crypto in a portfolio is massive for risk-adjusted returns and being able to boost up that sort of portfolio. Even if you are only focused on stocks, to have a small allocation to crypto is I think, imperative to an investment portfolio these days.
Welcome back to the Ben and Bergs podcast. I'm Ben, your favourite high school dropout and CEO of Collective Shift, and not alongside me today is Bergs. His daughter's 6, so he won't be joining us today, but he's also the COO of Collective Shift, and we're Australia's leading crypto portfolio insights company, providing professional analysis and portfolio strategies for crypto investors like you. We don't just talk theory, we're giving you the insights you need to become better in investing, build successful businesses, and level up your life. And today, we've got another cracking guest on the pod, coming all the way down from Sydney, specifically for the podcast, is Josh Gilbert, one of my good mates, Market Analyst at eToro. Man, it's great to have you here.
Thank you for having me, Ben. Yeah, all the way down from Sydney. Whenever I heard the idea of coming on Ben and Bergs, I thought, I've got to fly down. I'm coming for it.
It can't have anything to do with the fact that we're doing an event tonight as well. And
nothing to do with that, or the Wallabies playing on Saturday. No, specifically.
And the Wallabies, correct? Yeah,
nothing to do with that.
And all the other media commitments.
Yeah,
all that aside.
Yeah.
You've come down for today, so thanks, man.
No, pleasure. I'm happy to be here,
mate. This is new for me. My right hand man Bergs is he's left me today. I gave him a call this morning and said, mate, I'm out. And I was like, okay, well, we push on.
Yeah.
So couldn't have thought of a better guess, man.
Well, I can help alongside. Maybe I'll throw a bit
maybe
back
you
at
are the yeah, maybe just throw a few back at me.
Do it together. I'll try and fill Bergs' place. I haven't got any green headphones, but I'll try my best.
You had a hoodie and green headphones.
Yeah, I know. I'd fit right in when I.
And the Ben and Josh show.
Yeah. Oh, sorry, Bergs. Sorry.
Mate, so eToro, probably, you must be one of the biggest, if not the biggest, like, what do you call yourself? An exchange? Brokerage?
Yeah, investment platform, social investment platform.
That's right. 35 million users. I don't know anyone that would be higher than that.
Yeah, we are by far one of the biggest globally
It's
now.
Huge.
Yeah, absolutely. It all stems from, sort of the way that we've sort of built ourselves. We had Bitcoin on the platform back in 2013.
Yeah.
That really helped accelerate growth, obviously, especially as being a platform that was regulated as well. So obviously when, investors started looking at crypto, really retail investors in those early days, they wanted a platform that they could, trust. And especially with that regulation side, we obviously don't have that in crypto, but in terms of, having that protection, that was sort of really important. And then over the years, we've diversified, heavily into, stocks. So globally now we offer commission-free stock investing across the globe, UK, US, obviously here in Australia. So it's that sort of all-in-one investment app, basically.
And Yoni is the founder?
He is, Yoni Asia. Founded it with his brother Ronin back in 2007. So two, really innovative leaders in the space, and Yoni particularly, especially in crypto.
He was friends with Vitalik or something, wasn't he?
Yeah. So if anyone's interested to have a look, they basically wrote a white paper called Colored Coins, which was essentially NFTs before its time.
Yeah, right.
So that was before Vitalik had started Ethereum as well.
Yeah.
So just really ahead of their time.
Yeah.
And something that obviously helped him to sort of build eToro, and has always been really, really passionate. We did a podcast episode with him through our sort of eToro podcast. He was buying Bitcoin at $2.
That's unreal.
Yeah, so some
okay.
big numbers. Anything more than $2 are rookie numbers.
Yeah. Well, you were saying you were pretty early in crypto, right? So you got in Bitcoin around $5K, ETH at $50, Cardano 10 cents. So you've got a pretty unique insight as a market analyst. Like, you're covering crypto and stocks and a bit of macro, right?
Yeah.
Right now at eToro. So you're kind of seeing the lens 360 degrees.
Yeah.
Which part of it do you tend to focus on? Or does it switch, or you're kind of looking at all three at once?
I guess it depends. In terms of a lot of what I do is quite media focused.
Yeah.
So, talking to, podcasts like this, or TV, newspapers, etc. Obviously, and what our clients want to hear. So we obviously want to continue to offer sort of crypto insights, but really macro is what everyone wants to know right now, because that is what's driving everything in markets, inflation, interest rates, all of it, GDP. So talking a lot about that at the moment to because also it's a place where we've not been in the investment world for decades. We've never had interest rates this high for 10, 15 years, inflation this high for the same amount of time, especially in Australia. So these are some of the biggest tightening cycles from central banks in terms of lifting interest rates that we've seen ever. So it's a really different environment for investors that have maybe only recently entered into financial markets. So we're really trying to offer as much education and as much information to investors about what is happening in markets right now and what that does mean for your investments and how to sort of manage that and how to move forward.
One of the biggest things that we've noticed, crypto over the last long time has been super highly correlated with like the US stock market. We see the US stock market crash and the crypto tends to follow. We've been tracking recently like a kind of more weakening correlation between the two. I think, more recently there was a pretty bad week in the US stocks, and then BTC and ETH only retraced a little bit, where in the past they've significantly, dropped based on that correlation. Do you foresee that as more just crypto maturing and it's just that lessening correlation, or are investors seeing the asset class now a little bit differently to the stock market? How do you kind of see that?
I think a bit of both. I think with what we've seen in especially in the last 12 months, that's when that correlation has sort of really changed. A lot of capital has been sucked out of crypto, as we know. That hasn't been helped by the likes of AI coming in as well. That's even sucked even more oxygen out of sort of the crypto space, because this is one of the biggest sort of technology booms that we've seen probably since the 90s. So that's really drawing a lot of people in. When you've got Nvidia up 200% year to date, you've got Meta 140% year to date, Tesla more than 100% year to date. That's crypto numbers, right?
That's it, really. I don't know. So full transparency, I don't own any stocks.
Okay.
I don't own anything. I don't own anything else outside of crypto. So I want to walk away today with a portfolio.
You need a diversified portfolio.
We'll talk about that.
Yeah,
Sorry,
okay.
Continue. Anyway, go back.
Yeah. So I think, and also what we've seen over this time as well. Got NASDAQ, NASDAQ 100, the biggest technology index in the world. That's up 40% year to date. So that's again across 100 biggest stocks in the US. So again, still underperforming the likes of Bitcoin year to date, but still in terms of having a diversified approach for something like an index, that is huge. So, but while we've had that, we've also seen volatility drop significantly in the US, which is quite surprising. But something like the VIX, which is a tracker of the volatility that happens in US stock markets, that's down to some of the levels that we haven't seen since before COVID. So I think that has probably one of the reasons why we've seen this bit of a breakup in the correlation between the two. And also just the fact that I think that we probably saw a lot of institutions out of crypto. So rotating into, some of those other assets, because for a long time, what we saw was that crypto was just being treated like any other risk asset. So when, stocks sold off, tech stocks, we saw crypto sold off at the same time. That's not happening now. And I think that does have a big part from institutions. They do drive markets ultimately. So when we're seeing that liquidity drawn out of crypto markets and, elsewhere, I think it comes down to that, because we're not seeing the assets sold off at the first sign of a worry. If institutions are selling a tech stock or the tech indexes because of something, a risk or something like that on the macro environment. Of course, macro is still having a big impact, but not in the same way, I think, that we've seen over the last sort of couple of years. So we are starting to see that correlation change, and I think there's good and there's bad to it. I think it's good in the sense that it means that Bitcoin is sort of its own asset again, or crypto it's its own asset again. Not that it wasn't before, but just more that that then makes up a brilliant part of a diversified portfolio. It offers such great sort of risk-adjusted returns in that sense. Even if you are only focused on something like stocks, to have a small allocation to sort of crypto is I think imperative to an investment portfolio these days. As I say, when you look at those risk returns over the last 8 years, even shorter term, 4 years, whatever that may be, and I think being out of markets is easy to do, but this year shows that being in markets is really important. There's always something to worry about in financial markets, whether it's crypto or stocks. There's always something to worry about. It doesn't matter what happens, whether it's geopolitical tensions, whether it's macro, whether it's COVID. You've always got an excuse not to be in markets. But as I say, this year proves why it's so important to stay invested, to be in markets, to ride those ups, ride those downs, and just to not sort of sell at the first sign of worry, ultimately.
And do you think the markets, coming out of the COVID period, even the last 12 months was pretty uncertain? Rates were going up, inflation was out of control. Everyone was pretty worrying, and a lot of people moved into more risk-off strategies. We saw the first rate pause I can't remember when that was, last couple of months. We've just recently had another rate increase. We're back to raising rates. How does that impact the market? Like at the time of recording, we had a bit of a small sell-off Bitcoin-wise. How does that impact the market now moving forward? What are sort of your expectations for the back half of 2023?
So I think markets are very forward-looking. So a lot of what we'll see from here, I think, has been priced in for a while now. So we look forward. So months ago, markets would have gone, okay, we believe that rates are going to get to X in the US or X here in Australia. Obviously, that changes, absolutely. And that's where we see that short-term volatility come from. But for example, the most recent Federal Reserve rate hike was basically 99% priced in by financial markets, which basically means it's guaranteed. So, investors were expecting that. We knew it. There was no surprise. Here in Australia, we don't see that same sort of guarantee, if you like. Recently, we've had a 20% chance of a rate hike, and then we've seen it happen, which has moved markets quite significantly. So looking forward, I think where we are now, we believe that we're starting to see the end of these tightening cycles. So the end of central banks raising interest rates. Inflation has fallen significantly, and that's sort of a trend we're starting to see globally now. The UK is a good example. They had inflation above 9% pretty much the whole of this year, even above 10% at points. That has now come down pretty meaningfully. The US, we've gone from 7-8% all the way down to 3% on headline inflation just recently as well. So we are starting to see those trends. And the reason that, central banks raise interest rates is to sort of combat inflation, to slow down consumption. And, that what they have done is ultimately beginning to work. So they can now say, look, we can be less aggressive. We can start to slow down what we've done. And, Jerome Powell, who is the central bank governor in the US, he's basically pointed towards rate cuts, which is what we want to see if we're looking at crypto and tech stocks. Rate cuts are important because it brings down obviously the yield that people get on bonds and other assets. And that means that then we'll start to see that little bit of a rotation back into sort of risk assets such as technology stocks and particularly crypto. Obviously, technology has done pretty well, but that is on the basis of falling inflation and interest rates. As I say, markets are forward-looking. So they're not going to wait until that happens to start buying these assets. They're going to buy ahead of time on the anticipation that happens. And that's what we've seen so far this year. And that's why we've seen that move in crypto this year. That move in crypto came at the start of the year when we had those issues with the banks in the US. And that basically accelerated this idea of inflation falling and interest rates going higher. That sort of brought down those expectations, which is why we saw that move higher. So a lot of what we've seen in crypto this year has been driven by those macro movements.
And has that also made the same impact with tech stocks, as you mentioned before? Nvidia and a few other ones that have rallied 100, 200%. Like that's huge numbers in the stock market. Is it the same things that are impacting on the macro level that's impacted Bitcoin positively the same for risk on assets in the stock market?
Yeah, absolutely. That was the sort of the initial driver, and then we've had this tailwind of AI come in and sort of really boost up. So the stocks that are doing the best are those correlated to AI. So Nvidia, Nvidia's Q1 earnings, their guidance to the second quarter was one of the sort of the biggest forecasts that sort of we've ever seen on Wall Street. They sort of upgrade their revenue targets by 50%.
Wow.
Which is huge. In terms of when we're talking numbers here, we're talking billions and billions of dollars.
Big numbers.
And you're upgrading that by 50%. That's massive.
Yeah.
So that's why we've seen this big tailwind, because essentially investors don't want to be left behind. They they want to be involved with AI. This isn't going to be something that happens overnight. It is going to be a technology that does transform businesses over the long term. There's lots of conversation in the US about IT or tech spending by corporates going from 1% to 7, 8, 9, 10% on AI over the next couple of years. That's a big change in spending, and there's going to be names that benefit of it. I guess you could think about it in terms of the gold analogy as well, when we think about the picks and the shovels, and who is going to benefit outside of those big names as well. There's lots for that, and I think that's where crypto can play a big part. It's sort of been left behind in this sort of AI rally, and I guess it's about trying to find those those crypto assets that sort of can sort of benefit from it and accelerate what companies aren't already doing. I mean, Microsoft is probably the clearest name that you can talk about. They own a huge percentage of OpenAI, which is the founder of ChatGPT. That was sort of what really caught retail interest, because AI has been here for a long time. We've been talking about it for a long time, but not in this capacity. It's ChatGPT sort of changed the game, but you've had Salesforce, for example. They've been in AI since sort of 2016. There's lots of other companies that have been doing this for a long time, but now it's sort of retail based and
the consumer product.
Correct.
Yeah.
And now everyone wants a bit of it, but it is a fantastic product.
Yeah.
Everyone uses it.
Yeah.
Everyone uses ChatGPT. Everyone uses AI. It's brilliant. I did a podcast interview the other day, and I wanted to take some like quotes.
Yeah.
So I just download the transcript, put it in, give me the best quotes. That is something that takes you a fair bit of time to dive through, and you get it in minutes or seconds. And I think that helps. That then comes back into the global economy as well, because productivity is a big part of the labour market here in Australia, so the jobs market, which comes back into inflation, which comes back into interest rates, and productivity across workers, consumers globally, but particularly in Australia, has fallen quite significantly. Gen Zs, we're taking a bit of a backseat. I don't want to do that, but it is. The younger generation, aren't going to just say they're going to do something unless they're being paid for it, which I completely agree with. And we've got a lot of entrepreneurs like yourself who are working really hard, but in terms of actual businesses, people going in there, just near me, for example, where I live in Sydney, we are seeing bus times being cut back because they don't have enough bus drivers. So there's lots of different positions and productivity that's dropping. I think AI is not going to drive a bus anytime soon, but it can help in terms of productivity and picking up what people do, speeding up processes, and that then translates into better business performance, higher profits, higher revenues, which is obviously great for investors.
Well, who was that company that laid off a huge number of their content workforce and announced that they were going to move to AI? It was a content media company. Slips my name. But anyway, I totally agree. I think also like the way I look at investing is looking at like really like a business that I would use or a product I use, whether it be Bitcoin, Ethereum, DeFi. I really try and understand what the problem is that it's solving and would I use it, and that's kind of steers my investing strategy. For you in the stock market world, is that the way you look at stocks as well? You're looking at like, Microsoft, for example, you're using ChatGPT, using AI, you want to get a part of that movement. Who owns that? You go and invest. Or is it based on more narratives? How do you tend to look at investing when you're setting up your portfolio?
100%. Yeah. So there's a fantastic book by Peter Lynch called One Up on Wall Street. Anyone who wants to sort of get into stocks or hasn't got into stocks, have a read. And it basically just talks about simplifying investing. And it's brilliant because he had some of his best investment ideas from his wife. He was one of Wall Street's best ever fund managers, and some of his best ideas came from his wife going to the shops, looking outside the window, whatever it may be. But that sort of sticks with me because it essentially just says invest in what you know. So for me, to try and put a simple analogy on it, every time I walk down the street, George Street in Sydney, there's a queue outside Louis Vuitton. So LVMH, who is the owner of Louis Vuitton, you've got to be doing something right. Strip it back, maybe not as luxury. You look at Apple. There's always a queue outside Apple.
1, 2, 3 devices here.
Correct.
AirPods. Like,
got a pair of AirPods in my pocket.
Yeah.
And you look on the train, everyone's got AirPods.
Yeah.
So that is, AirPods, their revenue is bigger. What they make in terms of revenue is more than what Shopify, Hilton, companies like that, Snapchat, these massive companies, just from AirPods alone. How much Apple make in revenue is more than Hilton hotels yearly.
No way.
Yeah.
Just on the AirPods alone.
Just on the AirPods alone. So that product is absolutely massive. So I think you've always got to take it back to what you use. Will you still use it? Disney, probably as kids we watched Disney growing up. They're now transforming into what is, obviously a streaming service, but we're all going to probably watch Disney films as we grow up. Our kids are going to watch it. Yeah. We're going to go to Disney theme parks. It's that sort of cycle. McDonald's, we all eat it. Will we continue to eat it? Most likely. So it's those sort of ideas of trying to make investing simple. Obviously, there's the complex side of it. There's the fundamental analysis. There's technical analysis. If you want to dive in deep, you can. But I think sometimes we can overcomplicate investing, and it definitely is. I completely agree with you. What do you use? Will you use it in the future? Obviously, we want to look at, we want to be forward looking as well to try and find that sort of that next tech advancement. So whether it's Tesla with electric vehicles, whether it's, again, what's feeding those electric vehicles? Is it what's feeding the energy transition? Is it going to be who's going to help AI, succeed? Whatever it may be. But I think start with what you know. Start with the companies that you understand. Even if you work for Woolworths, right? You understand that business better than me or you would because you work in it. You understand how it ticks. You understand when your sales are higher. You understand when sales are going to be lower. That's a great reason to own a business. So those are, I think, the principles that you can take into investing, and then develop from there. Don't start, by investing in a penny stock that you've never heard of before. Yeah. That's not, and it's the same with altcoins.
So altcoins,
you don't want to invest into something just because you think it's going to 100x. Invest into something because you know it. And we spoke about names there. Meta, Facebook, up 140% year to date. That is a business that has 3 billion active users, is still growing. Had a bit of a tough period there when advertising slow down through that sort of what was that macro environment when inflation was really high and corporate budgets were sort of pulled back. But bottom line is that it was still a solid business. They launched Threads about a month ago, fastest ever app download in history, 100 million users in 5 days. What a powerhouse. Do you know what I mean? So again, that is something that our mums and dads use. I mean, we use Instagram probably more than Facebook, but it just goes to show that don't overlook what is right in front of you.
How do you look at and evaluate the, the value of investing in those assets? So we go, right, we look at Apple, for example. We both love Apple. I'm an Apple user, love the product, want to invest. Next step is then to understand, well, okay, what's the risk to reward ratio here? Like, I don't know what the revenue multiples are right now on some of these assets. Like, what's the market? Oh, you probably don't know off the top of your head, but the market cap of Apple,
3 trillion.
3 trillion. There you go. So I'm looking at 3 trillion. I'm like, okay, so for me to double my investment, this thing theoretically needs to get somewhere towards 6 trillion. So that's a lot of fucking money.
It is.
How do you look at, evaluating those assets and understanding, whether or not it is overvalued, undervalued? I think crypto can be a little bit more simpler in a sense of like, we look at the, you can't look at EBITDA, or the revenue multiples of Bitcoin, but you sort of look at where we think the technology is going, what it's trying to do, what it's trying to disrupt, and if it can do that, market penetration rates will increase on market value. For stocks, it's literally revenue growth, it's macro, it's what revenues we can multiples we can get. How do you look into and then allocate your capital accordingly based on the stock market?
So we obviously have the handy ability that we have balance sheets and
have something tangible to it.
There is some tangible assets there, but it's the same idea. We want to sort of look at where is the business going, where can it get to, and how is it going to get there. So probably one of the most commonly used sort of ratios or that is used in the stock market is called price to earnings, so the PE ratio, which essentially just looks at, okay, what is future earnings going to look like? So what is their future profitability going to look like compared to its current price? And then that gives you a good understanding if it's fairly valued or overvalued. So that is a good indicator, but it's not always it's not always the best way to look at it, because we had Tesla a couple of years ago trading at 200-300 times its price to its earnings, but it continued to move higher, but its earnings grew. So when its earnings then grew, its price to earnings came down significantly. So even if you believe that a stock is maybe overvalued per se, it doesn't mean that you should be put off by it, because if you believe it can grow, because we do see hypergrowth can happen. And that depends on how you're looking in a business, if it's maturing. So a good example is something like Alphabet or Google at the minute. Its search engine advertising revenue is starting to mature. We're not seeing hyper growth. So revenue growth is slowing to sort of single digits, where we used to sort of see 20-30% revenue growth quarter on quarter or year over year. And we're not seeing that now. But what's happening under the surface is their cloud product and AI. That is growing significantly. We're talking 30-35% growth, and profitability was more than double analyst estimates in the recent quarter. So you can look at the main bulk of the business, that does 50-60% of revenue through advertising. And then you can look at, okay, what's going to be the driver? Same with Apple. iPhones is clearly the key driver there. And you look at something like the iPhone 15 that's going to come out, and we can anticipate, okay, what is going to be the market reaction to that? We think about upgrade cycles. Every 2 years we think, okay, we need a new phone. That one's got a better camera. That one can go underwater, whatever it is. But then we think about iPhone again, main revenue stream. But then you've got services. Then you've got App Store, Apple TV, Apple Pay. Apple Pay, humongous. So it's all of those different drivers. So we can look at those base numbers and okay, great. Apple is $100 a share, but it's overvalued at 45 times price to earnings. But you look at the business model and you say, okay, wow, Apple services grew by 15% last quarter. It's going to be 25% next quarter. And then you just sort of go from there. We can't really predict what is going to happen to consumers in the future. Look at COVID. We never knew that was going to happen. Some of the most popular investments in Australia are in something like lithium miners, because it's the idea that the more lithium they can mine, the better, and that is going to be part of this energy transition. But we can't get an idea of what could happen. We have train derailments when you're transporting lithium and all these types of things that you can't put into that analysis. But all you can look at is what is in front of you, is trying to say, okay, I believe that business is going to go there. So, valuing a business is great. And I think a good example of that was Meta. When Meta's share price fell significantly, it was significantly undervalued, but everyone said it's a dead business. It's not going to go, it's matured. It's not going anywhere.
People get bearish.
But then when you look at, what it had on its side, those billions of active users, it was just a case of actually, okay, this is a business that, has matured, but is just suffering under what is a slowdown in advertising spend. When that picks back up again, and it will, we will see those advertisers coming back to where they can guarantee that they are going to get results, which is in a place such as Facebook and obviously with Instagram and Reels. Reels is on track to sort of do more revenue now than TikTok for the full year. So that just shows, how far they've come and how well Mr. Zuckerberg has done in terms of being efficient and getting the business back to sort of where it needed to be.
It's really good insight, man. I appreciate that. I want to now take it to a next level and go, okay, I've got 99.9% of my wealth exposed to crypto. I've got my crypto portfolio and I've got my company, both exposed to crypto. Yeah. I own very little cash. Everything's in crypto. Don't own property, don't own anything else. Hyper conviction. Now, I do that because my risk appetite is quite high and I have, I know this space so well that I know where it's going and I want to be fully exposed to that. Now, the other side of that, let's say I want to reduce my risk tolerance a little bit, my risk strategy, and I want to get diversified in stocks or shares. What would your without going too micro, what are like sort of the sectors? What does like a portfolio strategy look like from a macro perspective if wanting to diversify in stocks or shares?
I guess it depends in terms of risk as well, in terms of how an investor wanted to set up their portfolio. Okay, do you still want to take on high risk, or are you investing into stocks because you want to draw back a little bit of risk?
So I think if I was to buy stocks, it'd probably be in the next cycle. Instead of taking all of my capital in fiat, the profits, I'd want to set up a portfolio to, I guess, diversify and store a bit of wealth. And I guess it comes back to the point of like, well, would you go through an ETF? Would you go through a Vanguard? Or would you actually go and, pick particular stocks? So I think in terms of the risk profile, far lower than crypto.
Yeah.
I'm probably looking at that, hopefully somewhere between that sort of 5 to 15% range over the course of the year, something a little more stable. I don't want to barrel into any sort of penny stocks.
Well, so then that's it. So if you're a stock investor and you don't have crypto and you have exposure to penny stocks, that's your crypto per se.
Yeah.
But as I say, we believe that having exposure to crypto in a portfolio is massive for risk-adjusted returns and being able to boost up that sort of portfolio. But in terms of going from crypto into stocks, again, start with what you know. If you want sort of instant diversification, you do go through ETFs. Look at an S&P 500 ETF, its performance over the years, its history, long-term guaranteed returns of 10%, per annum over the last sort of 40, 50 years.
Is that what it is? Average on 10%.
So, I mean, look, that's happened. We can't, past performance isn't
a
a guide to sort of what's going to happen
in the past,
in the
about
future.
10% on average.
Yeah. So, that's a good idea, and it just comes back to compounding and long-term growth. And as I said a minute ago, it's time in the market, not trying to time the market. Because, as I say, there's always a reason to be out of markets. It's so important to stay invested, as we've seen so far this year. But yeah, I mean, it's great to have sort of an allocation, especially in stocks, depending on how you feel the world is going to go and what you believe in. So I like to have a mix, of assets. So a little bit defensive, some sort of traditional like healthcare names that I know is going to be all weather stocks that we're always going to need. Whatever happens, we've always got to go to the doctor. Consumer staples, we've always got to go to the shops. But then you also want to have a bit of exposure to consumer discretionary when retail spending picks up as well. You want to be on that.
We're talking like luxury goods, like flights, airlines, hotels.
Yeah, or Amazon, those types of names to sort of keep it relevant. But also now, you mentioned airlines there. Airliners, travel businesses are absolutely booming because after the back of COVID, they were obviously so beaten down. Valuations were so low. People didn't want to own these companies because no one knew when it was the end. But now everybody wants to travel. So everybody wants to own these stocks.
That would have been a great counter trade, wouldn't it?
But again, that's hindsight. It's to try and picture that. Again, there's a lot of risk in that trade if you're going to go into it when you don't know what the end goal is. And then obviously you want to have that exposure to sort of growth stocks, to technology, what's next. So maybe we look at something like materials, to the material sector. So we're talking like miners, so right now, for example, you've got a Chinese economy that is really, really struggling. But from what we would call sort of like a contrarian point of view. So when we say contrarian, we're thinking about taking the opposite side to what everyone is doing. So trying to find the undervalued areas. So China's economy is really, really struggling at the moment. But at some point, they are going to receive a stimulus package. They are going to receive, support to the property sector. And they are going to come back online. It is the second biggest economy in the world. It's struggling, but it's still going to see the biggest growth of any economy this year. And if we look to sort of China, we can say, okay, great. Well, when that does start to come back online, they're going to need, when they start building houses again, they're going to need iron ore for steel. They're going to want copper. They're going to want all these sort of commodities they've had exposure to. They're going to want oil. So that is then giving investors an idea. Okay, at some point that's going to happen, but it's about being patient. It's not going to necessarily happen overnight. But to come back just to, looking at that diversified portfolio, how to sort of build it, I think it's about being diversified. It's not looking at just one stock, one sector, just as you would with crypto. You wouldn't invest in the same coin that did the same asset that did the same thing. And I think that would then say, if you are completely in crypto, don't come into crypto and then go and buy MicroStrategy because it doesn't make any sense, because it's just the same exposure. So try and mix up that exposure. Invest in what you're passionate in, build a portfolio on the back of that. If it's to de-risk, you would look at maybe some fixed income bonds, or, an ETF that tracks an index, maybe it's dividend yield. If you want to keep these stocks for 20 years, own a stock that is maybe a bit more mature and that has a dividend that can continue to reward you over the years. And 20 years later, that dividend is obviously much larger, much more attractive as well. So yeah, if you're de-risking, ETFs, global exposure, not just exposure to say the US, because something like the Australian Stock Exchange is and just mostly global stocks, they tend to underperform against the US. But last year in 2022, when the US stock markets fell quite significantly, the ASX or the Australian Stock Exchange outperformed most other stock markets because it has that sort of defensive style. It's built on dividends, like financial stocks, miners, paying a dividend. The ASX 200 pays an annual dividend yield of about 4.5%.
Fascinating. So what, you can buy the ASX index?
Yeah, so as an ETF, you can buy it as an ETF.
Yeah, right.
And it pays a 4.5% dividend yield each year just by itself. So without any gains or losses within the index, you're going to get 4.5% yield on.
Fascinating.
Yeah.
And you can do that through eToro?
You can, yeah. So
and then you earn the dividend through the platform as well. Like, it'll just give you
it just pays out. Yeah, just pays
in
you
that
dividend.
token, like in that share.
No, it just pays it as cash dividend. So you can then choose to reinvest it, or you can then choose to invest it into another stock.
And is that one of those history is 4.5%, or like no, you get 4.5%?
4.5%. Look, it fluctuates over the
Sure,
years, so
sure.
it'll grow and it will fall depending on obviously what companies within that index are doing.
Sure.
So if companies are doing really, really well, and profits are high, that will go up. If profits are coming down and companies trim their dividends a little bit, that may fall this year a little bit because some of the energy stocks aren't having the same. They aren't having the same years as they've had in previous years. It's not been as successful because oil prices have come off a little bit. You could look at miners. Lithium prices have fallen significantly. Iron ore prices have fallen significantly, which means they're not making as much money. So it means that as an investor, they're not going to pay you as much money either.
Of course.
So it does just depend on what those companies in the index are doing.
I guess the ASX is set up so much differently with the companies on that, where Australia is more known for banks, commodities, insurance, and all this boring shit. Like this is like I don't know, one tech company. Like, is there much tech?
There is a few tech names.
Is
actually.
there?
Yeah. So it's actually there's a company called Xero which does accounting. That's actually a New Zealand firm. There's a few names like Life 360. That's actually a great stock that is. It basically is like a tracker, like an app tracker.
Okay.
So for like kids and things like that, you can see where you are, what you're doing, a little bit like an Apple AirTag, something like that. Lots of, there is lots of tech stocks, maybe not as exciting as what you get in the US, but there is still growth there.
Yeah.
If you got to find the diamonds in the rough.
Of course. I guess you probably see the most global tech companies, Atlassian, Canva, etc., go to the US, and whether they say private or go public, they move across there. But that's kind of fascinating, mate. That's been a really good insight. I must say, maybe I'm going to set up a portfolio in the next cycle.
Yeah,
certainly not pulling any of my Bitcoin out right now to buy buy Apple just yet.
Yeah, but I think having that exposure is good because obviously right now, especially as we're both young. We both want to have. You can afford to be higher risk.
Sure.
People that are obviously a little bit later in life or are wanting to have just a constant steady income or a bit more of a they understand the risk a little bit more.
Yeah.
You don't want to be going in all into Bitcoin and then your capital's down.
Yeah.
Whatever it was last year. But then you obviously, like I say, it's risk rewarded. So even if you feel you don't want it now, it's about sort of looking ahead to the future. Where is AI going to take these stocks? I think if you'd have invested $1,000 into Apple, in its IPO, you'd have 1.5 million now. So little things like that, I think, are just important to remember. Buy these stocks, own them for as long as you want. Understand your timeline as well. Same with crypto. You talk about strategy and goals so much, so important. If you're going to buy a stock and then pull it out in a week or 6 months.
What's the point?
You've got to be far more strategical on why you're buying that stock. It's a trade. It's not an investment. So you've got to understand why you want to buy it, how long you want to own it. If you're going to buy a house in a year, putting it into the stock market is probably not a good idea because we want time to be able to ride the ups, ride the downs, as I've said. If you would have just got into the stock market last year, you would have thought it was the worst thing ever. If you'd have pulled your money out, you'd have been absolutely, very upset because this year, we're up. 40%, as I say, with the NASDAQ. The S&P 500 is up around 20%.
Yeah.
So, long-term gains, it's zooming out, as we always say.
Similar to crypto, isn't it? Just human psychology, and I think it's around that conviction. If you don't know what you're buying, if I come barreling into the stock market and buy these random, stocks and it's down 25%, I'm probably going to think, fuck, I've just made a mistake. I need to get out. This is going down.
Yeah.
Same with Bitcoin. People come in and buy alts and they don't know what they're doing, and the market retraces and they panic and they sell. On the flip side, if you have conviction, you know what you're doing, you have a strategy, you're buying for the long term, you're going to ride those waves out.
Yeah.
Very similar.
So like I mentioned Apple there, and, that long-term growth over its history, I think it's fallen 80% twice, 50% 4 times, and like 30% 15 times, something along those lines. And, you'd have to go through that. If you see a stock down 80%, you think, but it's about having, again, that long-term conviction, looking ahead. Why do you own it? Well, you own it because at some point they're going to bring out a product like AirPods, and it's going to do more revenue than it does for Hilton hotels over a period of time. Yeah. So, maybe that's the VR headset, maybe not, but it's a $3 trillion company, and it has hundreds of billions of dollars worth of cash. It can basically do what it wants. Yeah. So it's up there. But all of those stocks is long-term conviction, and it is just having a mix of a portfolio is really important, I think, in terms of long-term growth. Having some exposure to sort of crypto, especially with this sort of the BlackRock coming into it. That I think that's going to be a real key catalyst for sort of crypto. Retail investors are quite heavy into crypto. It's institutions that are missing. That's going to be the key here to push us back to where we have been, and even further from there. Once you start getting asset managers like BlackRock into the game with their trillions of dollars, that's a game changer for sure.
Get that boomer money in.
Yeah, bring it all in. Yeah, bring the pensions in.
Mate, that's been a really good insight. Thanks for that. I want to switch gears a little bit to the first time we met.
Yeah.
18 months ago.
Yeah.
We did a video.
We did.
And the video is called Top Trends and Projects in 2022. We actually met, I don't know how, maybe it was, I went through one of the eToro guys, maybe Luciano or someone.
Yeah, it would have been probably Luciano. Yeah.
Handballed off to you.
Yeah.
We met on the first time, did a video. We just looked back, it was 18 months ago, and we both look like we're about 15 years old.
We do, yeah. We still look young now.
We still look, maybe we look 16 now.
Yeah.
But mate, I'd love to get, and we've got an amazing event tonight. We've got planned, so we've got some cool things planned between Collective Shift and eToro. But for you, as an analyst in the space, mate, like, there's a lot of listeners on the Ben and Berg show, and then also like Collective Shift, and just people I speak to wanting to get more in the industry. You've probably come through a more traditional route in terms of, being an analyst and, content creator and those sorts of things. How did you get into the space? What sort of drew you to it? I believe you started more in the macro stock space, and then crypto sort of was added on. But I'd love to hear your journey on how you got into it.
Yeah, so I mean, when I was 17, I had no idea what I wanted to do. As sort of most people, I lived for a long time, wanted to be a professional footballer, and then you quickly realise. Well, when I quickly realised I wasn't going to be taller than 6 foot, I threw that onto the into the water. But yeah, I came to Australia when I was 18 for a gap year. Luckily enough, I have a family that live in the Gold Coast, so I had a base, could set myself up. And then went back to England, sort of not really knowing, again, sort of what I wanted to do. And I had a friend that worked in sort of a boutique investment management firm, sort of pulled me in. And I just loved it from the get-go. Just that we had a really, really tough managing director. Big 6'5" guy, bold, scary as anything. And I remember walking in on the first day, and my friend who was in there, he says, I'm going to tell you 2 things. He says, always look smart and never be late. And I said, why? He said, you'll see. So, I've been there a couple of weeks, and I sit down at my desk, and someone comes in late, and, he'd usually shout at them, why are you late? What are you late for? Oh, sorry, boss, traffic was bad. Well, get up earlier. And then a couple of weeks down, again, I'm, 18, 19, and I'm sat in my seat, and I used to sit right next to his desk. So I had my sort of boss, and then we had a managing director who used to sit right next to his desk. And I was stood up in front of his desk one day doing what we would call like a morning talk. So I'm rapping what happened in the markets overnight in front of, 50 to 60 grown men that have been doing this for a long time, traders, it was daunting enough to even be in that room, just really thrown into the deep end. I was by far the youngest person in there by at least 10 years.
Yeah.
But I was given an opportunity.
Yeah.
When I went in for the interview and I spoke to them, he basically said, why should I give you a job? Why am I going to give you?
Yeah.
Why am I giving you an opportunity for?
Yeah.
So I basically said, just let me prove it to you. Give me 3 months. If you don't, sack me. I had nothing to lose. I was living at home with my parents. I had nothing to lose. Give me 3 months. If it doesn't work, chop me. No problem at all. He said, all right, I like that. I like it. And he just said, I'll give it to you. So yeah, going back forward, I'm stood in front of his desk, and someone walked in, and he was on my team as well. And he walked in late, and I could just hear him behind me. He goes, ask him why he's late. And I went, what? He goes, ask him why he's late. And I went, what? And I went, Ollie, why are you late? The whole office went quiet, and he went, traffic was bad. And then he says to me, he goes, well, tell him to get up earlier. And I was like, oh my God. And I went, well, Ollie, get up earlier. And he's like, oh. And then lunchtime comes, he goes, mate, you didn't have to do that and out me like that in front of everyone.
Yeah, mate,
I'm
boss,
like, mate, the boss is behind me. What do you expect me to do?
Yeah.
And yeah, so it was a tough learning curve, really tough learning curve. I was in a very, male oriented environment, very boisterous environment for a long time. So you've got to come around to that very sort of quickly. But, I managed to find, common ground with people, which helped. We were taken over by a larger American firm. They saw something in me, being younger than everyone else in there, to sort of give me an opportunity to go through. Started working very closely with sort of trading desks. And then I basically sort of was working very closely in that environment. Came to Australia for a bit of a 3-month sabbatical. Ran into eToro. We'd sort of just started our journey here about sort of 4 years ago, and a smaller office at the time. They wanted basically someone with my experience. They liked the idea that I was sort of young, could offer something quite fresh, and they gave me the opportunity and came to do that, and I've sort of grown since then. I owe them a lot for sort of obviously giving me the opportunity to work in Australia, of course. So, being a Pommy, needed that sort of sponsorship, so sort of taking a bit of a gamble on me. I'd never worked for them before, but I must interview well, clearly. But look, it's been a journey, and I've absolutely loved it. I hated anything to do with numbers at school. Never wanted anything to do with it. And if you'd have asked me at school, I wouldn't have thought I'd ever be doing anything like this. But it's a bit of a rush. It's so interesting. No day is the same. Something different happens on the markets every single day, whether that's crypto, macro stocks, whatever it is. Having conversations with different people, and also just being able to learn. There's so many great people in this space. I'm very lucky to work under a strategist, Ben Laidler at eToro, who's been in markets for 35 to 40 years. And again, I owe a lot to somebody like him, because being someone that's younger in this industry, it is an ageist industry. You would have probably found it yourself, especially in sort of traditional finance. People sort of look down on you, and fair enough, you've been doing that for sort of 30, 40 years. You're absolutely going to have more knowledge in this game than me, but it doesn't mean that sort of we don't know what we're sort of doing. And he is someone, whenever I've had conversations with him, working under him for sort of a year and a half, 2 years, never once spoke down to me. Always, spoke to me as if I was, sat next to him at JP Morgan, and I've been doing this for 25 years. And I have a lot of respect and a lot of time for people that can sort of do that. And he's really helped me on my journey. And there's probably times he thought, oh my God, what a stupid question, this guy. But he's never once made me feel like that at all. And I think that's so important to have as someone you look up to and a leader. And that's been really key. And I go back to sort of when I was first in that environment when I was 18. I had some really great people that I worked with and people that I could sort of look up to and sort of push me to go to the sort of next levels as well. So I've been very lucky on the way to have people that have supported me and to help me. But I also say in life, you've got to make your own luck as well.
100%, man. I resonate a lot with that, and I love that story. You were 17. I had a similar experience where, opportunity came up and you just got to take it by the balls.
Yeah.
Whether or not you really know what you're doing and backing yourself. I love that. Like, just give me 3 months. Similar to, where I started, I was like, I'll just work for you for, this is in crypto back in
Yeah.
2017. As an old friend of mine, I was like, I'll just work for you for 4 weeks
Yeah.
and just see what happens. And within, that period of time, they see the value, they see what you can do, you learn, you grow. Do you know what you're doing? Probably not. I didn't even know what Bitcoin was back then when I was working for him. You just fucking figure it out.
Yeah.
A little bit easier, I think, in crypto with the ages stuff, because crypto, I think, just generally skews more younger.
Yeah, absolutely.
Traditional finance, I could only imagine that's a lot different to crypto.
Yeah, it is. I mean, look, it's a tough industry without a doubt, especially being younger. As I say, you do have people that sort of do look down on you in that sense. I've been in environments before where you do just feel, completely boxed out.
Yeah, you feel out of
no
it,
one
yeah.
wants to,
Yeah,
even
fuck out of it.
entertain.
Who are you?
Who are you? Yeah,
Yeah,
you're here to
you
sort
go,
of
go get us a coffee.
Yeah. But, there's been, as I say, some really great people that I've worked with. And I also guess that comes down to, people not knowing who you are. When I've maybe felt that at the beginning and you get to know people, I think it just is on a personal level. I think, when people get to know you and who you are and what you can offer, and just honesty as well. I don't claim to know everything. If you claim to know everything in financial markets or anything in life, and I think I'm just quite upfront about that.
Yeah.
And what I offer, I think, in terms of to financial markets, to eToro clients, to just general people, is that I try to talk about finance if I'm talking to my mum. My parents have got absolutely zero understanding of their finances. My mum just basically, all she has in her mind is that she never wants a mortgage, she never wants debt. Simple as that, never want debt. But I say, well, Mum, Apple, they got $100 billion, on their balance sheet. They've still got debt. So it's just about trying to understand that and break it down. And I talk in a way, whether it's on podcasts, whether it's on TV, that the everyday person sitting on their couch at home is going to understand, because the people who know already do know. So I want to help people that don't understand what investing is to help them get into it. Explain to you why you should go completely from crypto into stocks, and I love that, and that's a big passion of mine. And to know that you've maybe helped one person get in, or been able to potentially, I'm not saying I've changed lives, but being able to help people on their journey,
make an impact.
To get to goals and whatever that is great. And I've loved doing it, and hopefully inspire as well. People see, where I'm from back in the UK, it's a small town, small area. On TV in Sydney, not sure I would have ever sort of thought I'd sort of be there, but yeah, it's a real big passion of mine to try and help people sort of get started on that journey and just understand what it is and break it down. And I've even had I've worked from gone from people who are just starting their investment journey, got a little bit of cash spare that they want to invest, to working with the Wallabies. Yeah. Right. I've got Wallabies players who are talking to me about investing. They're calling me on my mobile, asking me, what to buy or how to buy. I can't tell you what to buy, but it's more the case of they still haven't got any understanding, but it's that openness, that honesty. Okay, great. I wouldn't have a clue, how to, play in your line when, when you're playing rugby. Could have a good go, but it's about just trying to help people move forward. Even people that are super successful like that aren't necessarily completely tuned into the everything. They're just happy doing what they do. Okay, that's where I can come in. Okay, this is it's very simple. It's not very simple, but it's once you get down to it, it's not as hard as it looks on the surface. So yeah, it's great to be able to do that.
No, I love it, man. And I think for those listening at home that are wanting to get a job in crypto specifically, and this might be resonating in other industries, but I think having a passion for something and following your nose a little bit, if you don't really know where you can add value or what you like, is just trying stuff. And then two is just making opportunities or taking opportunities, make it happen. Like, I think there's definitely luck involved, but you make your own luck as well. Yeah. So offering your time, getting there for free, volunteering, doing some work, you just got to make it happen, because you're competing with every other snoozer that wants to try and get in the space as well.
Yeah. And I think you've got to ask questions, you've got to speak to people, you've got to be confident in sort of doing that.
And back yourself.
Absolutely. Yeah. If you feel like you've got something to offer, it might not work straight away, but don't sort of take that first knock back. As I say, when I started when I was 18, I'd plenty of knockbacks. You're speaking to clients, or you're in the office and you don't think you can do it. I think of that 3 months, I think I was basically a day away from not getting the job. So I was literally hanging on by my fingertips. And then I remember just grinding it out.
Yeah.
I was the first in and I was the last to leave on that last month, just because I knew when I was in it that it was what I wanted.
Yeah.
It was that period, okay, you go over that first month and you're like, oh, I can't do this.
Yeah.
I can't do a second month. Okay.
Yeah.
And then the third month, like, I'm absolutely going to do this now. And I think it's about trying to see that future goal, trying to get there. We're always going to have those down days where we don't sort of really want to do it. But, I think you talk a lot about drive and, just how passionate you are about wanting to sort of make something. I think that is so important. I think if we talk about passions as well, more than anything, I'd love to be a sports coach. I'd love to just go and coach a football team or something like that. But my worlds combine. Like, I have the ability to work with sports sometimes. With eToro, we sponsor a lot of teams in the UK and the Premier League. As I say, we sponsor the Wallabies here. So crossing those both over, sitting down with a room full of international rugby players and talking to them about finance, and them coming up to you at the end and asking questions. That's amazing. I love that. But just in general, I think, you're absolutely right. Got to ask questions. You got to be willing to go out your comfort zone a little bit. Do something that doesn't maybe feel like you should do it. Message someone, have that conversation, butt into a conversation, and just apologize. Say, look, how can I be like you? How can I get to that point? That's massive.
I think that feeling of uncomfortability is when you're in the right spot.
Yeah.
And I've been there for I've been there a lot.
Yeah.
But you're just reframing and rather than, and I talk to myself around this, rather than feeling uncomfortable, fuck, I need to leave this situation, and turn into a positive. I'm uncomfortable. I'm learning. I'm progressing. Let's actually sit in that and move forward, mate. That's a sensational story. I appreciate that. I think the listeners take a lot away from that. I just want to wrap with one other thing. Collective Shift. I have to ask. You use the platform a little bit.
I do, absolutely.
I'd love to hear how you use it, what you find value in it. I know we've had a few conversations about some stuff over the past, some content, but man. And I think you've listened to Ben and Bergs a couple of times.
I do, yeah. I do like Ben and Bergs. I was laughing the other day because, as you said, Ben, at the start, we're pals outside of this, and I remember when you found your ETH, and Bergs goes, "Oh, you just found 20 grand's worth of ETH in your sock drawer." That's exactly my reaction.
You said the same thing.
I think we were on the phone, and I was like, "Oh, brilliant! 20 grand's worth of ETH in your sock drawer."
Down in the couch, mate.
But no, I mean, it's brilliant in terms of I sometimes call you to be like, look, I need this in terms of research on crypto. Can you get it for me? Because it is so difficult to get in-depth research on crypto at your fingertips, outside especially something like a news outlet. I mean, CoinDesk and all those ones are great, but to actually get more in-depth information, and your team is great. I mean, Matty's an absolute weapon, and Nick and the rest of the guys are superb, and the content that you put out, even just having a quick read weekly, going through the platform, trying to find something that works for you. There's a number of times I've sort of used the platform to find an angle, or when there's been times I used to talk a lot about crypto in 2022. When it was a really tough year to talk about crypto, to just trying to find, not trying to find something positive, but also there's not always something happening in crypto. In stocks, there's always something, I think, happening. There's always a stock moving for a reason. With crypto, I don't think that's always the case, but to maybe try and find something slightly different, some on-chain analysis that you guys put out to offer a different angle and different perspective, I think is brilliant. And that's where I found it really useful. And I think that, those insights are sort of great, because it helps me to then pass that on to sort of eToro clients at the same time, and to put out onto sort of socials. And again, following you on socials as well is sort of a great help in doing that. But I think listening to podcasts is brilliant as well. Even just like the Ben and Bergs, it's just brilliant, though, isn't it? It's like
well, sucks he's not here, mate. There would have been a good bit of banter today, I reckon.
I like the back and forth, and the lightheartedness, not taking yourself too seriously. I mean, I run a podcast at eToro with a chap called Sam North, and we like to do that as well. Try not to take it too serious. We usually start for 5 minutes talking about football. Talk about the Premier League for 5 minutes and have a bit of a joke, and for a while there we were like, oh, maybe we should stop. Because not everyone likes football. And one of our popular investors, so basically somebody who you could copy on eToro, basically sent us a message and was like, I absolutely love Yeah, and she was a female actually,
Yeah.
and she was like, "I love it. It
Yeah.
just takes that bit of an edge off.
Yeah.
It sort of puts you, into sort of relax mode,
Yeah.
if you like,
Yeah.
and just, it's called digest and invest,
Yeah.
and we're trying to help you digest it
Yeah.
and then move on to sort of invest and to understand that news. So podcasts are a huge way, I think, to get their content. You see everyone with headphones on a train
Yeah,
these
man.
days,
Yeah.
so it's huge. But yeah, I am very sad that Bugs isn't here.
Yeah, man. It was going to be fun. I mean, it still was fun. But
was fun, yeah.
yeah. And we might spin up our own pod at some point if Burgers doesn't come back.
Yeah, if Bugs, you
Might
better
be
come
taking
back. I'll replace you, Bugs.
Josh, thank you so much, man. Thanks for coming on. Where can people follow you? You personally as well as eToro.
So you can follow me on Twitter, Josh Gilbert _ LinkedIn.
Yeah.
Feel free to connect with me, follow me, post quite a bit on LinkedIn, content about stocks, crypto, whatever it may be. And you can also follow me on eToro. So the beautiful thing about eToro is we're a social network. So you have that ability to engage a little bit like you would on Twitter, basically a forum online where you can invest, but also have conversations. So you can post your opinion about Bitcoin. And you can get someone else replying to it. You could have somebody like you saying, okay, great, I agree on point one, but I don't agree on point two because of X, Y, Z. So, we're the only sort of, investment platform that offers something like that in terms of size and scale. It's a community of investors, got over 30 million users, at your fingertips, which is humongous. We recently partnered with Twitter as well, which was a bit of a landmark partnership to offer sort of charts on cash tags. If you search for BTC or if you search for Tesla, you could view the chart on eToro, or click view on eToro, and it'll take you straight through to eToro. And it just sort of that collaboration made a lot of sense because two social networks sort of coming together, and people turn to social media these days for their investment ideas, for their news. Reddit, whatever it may be, Twitter, they're great resources. So yeah, you can have a look on eToro. I'm Josh Gilbert on there as well. I post a fair bit on there, but yeah, like we said earlier, if you have a question or you want to know something, you can reach out, and we're always here to help, aren't we?
Brilliant, man. It's exciting. We've got a nice little event tonight too, which we're looking forward to.
Yeah, gonna put a jacket on for that one. You get a little suit.
A little jacket, I think. And then we've got the Wallabies tomorrow night, which will be fun.
Yeah, that would be very fun.
I've actually never been to a rugby game in general. It's going to be my first,
ever rugby?
Ever.
You're just an AFL guy. Yeah?
It's AFL, cricket, basketball, basically everything but rugby.
Yeah, okay. Wow. I've never been to an AFL game, so maybe we'll have to
You've never been to an AFL game?
Never been to an AFL game.
No.
I know.
That's bullshit. You live in Sydney.
Yeah, I know. Well, I mean, if I lived in Melbourne, I probably would have had to have gone to one.
Oh, there's nothing else that you do. That's what?
Yeah.
Are you kidding?
No, I know, yeah.
Right.
So we do need to get that in the pipeline. But to be honest, I mean, I might offend a lot of people here, but I just can't.
You don't like it?
To go. I don't want to say I don't like it because I don't think I've ever given it enough time. I just can't get to grips with it. I mean, I love sport.
Yeah.
So I'm willing to give it an opportunity, and I think that the athletes are some of the best athletes in the world. The fitness, the way those boys run in and hit each other.
Yeah. But you just haven't got to, mate.
But I just haven't got into it.
At least you're in Sydney, mate. If you're in Melbourne, you'd be shot.
Yeah, I know. I think what people have said is that you sort of need to get to a game and get to the atmosphere.
I'll take you to a game, mate. Yeah, I'll take you to the game.
Maybe need to get to the MCG when it's packed out.
So tonight, I'm recording Collingwood Carlton playing tonight, sold out.
Yeah, wow.
95,000.
What, at the MCG?
Yeah.
Oh, huge.
Yeah, it'd be a big night tonight. So, we should go to one of those games, really get a taste of it. Even if you don't like the sport, just being there is unbelievable.
Yeah. So, I mean, like I say, I'm absolutely open to coming around to it, but I love football, I love cricket, I love rugby, and I've just not got around to it.
Well, our band's on the Ashes, mate. So, for those that listen home, obviously Josh is from England, and we're both, tragic cricket fans.
Yeah.
Depending on who wins and who loses, there's about a 2 to 3 day reply period afterwards.
Yeah.
I went dark there after the third. Was it the third test? I was like,
we pulled it back 2-1, but you were absolutely gloating. The quickest replies we've ever had from you.
Mate,
The
first two games,
days.
I was up and about, and then the third game, I just turned it off.
Just smashing about it. Yes, I know. I'm watching it.
I had about 15 messages from you. I was like, I'm not replying. I'm out. I'm out for a few days.
But it was, that was a tough watch, and I mean, I was up watching it last night as well, trying to see if we can draw the Ashes because I don't want us to lose it because it's
in the balance here. So if you guys, and by the time this comes out, I reckon the game will be done. But right now, if you guys win this test, then the narrative is going to be that you should have won the whole thing, right?
Yeah.
So I think for you boys, it's like getting the win, and then and to be fair, 95% chance you would have won the last the fourth test instead of the rain. But if we win, then it's like we can actually probably walk away and go, okay, we deserve that.
I mean, you were absolutely the best team by far in the first two tests. I mean, that was glaringly obvious. And I think in the second two tests, you would say, England were probably the better. So I think that one thing to take away, whatever happens, it's brought a lot of eyes to the game.
Yeah, the Bazball, mate.
Yeah, Bazball, the Bairstow stumping.
Yeah.
All of that. It had a lot of people talking. Whether people think it's good or bad, I think it, put a lot of eyes on the game, and it has taken this idea away that Test cricket is boring. I mean, it can be boring just sitting there and just watching defend. And what England have done is made it a little bit more exciting. People want to stay up and watch, and it doesn't put you to sleep. And I think that's brilliant. And it has been a good bit of banter, isn't it?
It has
Back
been a
and
good bit of
forth.
banter.
So let's see who wins. Maybe we'll put a little wager on it.
Yeah, I like that. We'll chat later. We'll chat after the pod. Okay. Everyone, thank you so much for listening. Another cracking episode here with Josh Gilbert, Market Analyst at eToro. We'd love for you, if you like this episode or have any friends or family that are wanting to get into stocks, shares, maybe they're crypto investors as well, that you think they'd find value. We'd love for you to share this podcast. It's how we grow it. We've just ticked over 10,000 downloads, which we're super excited about. So thanks everyone for tuning in and being supporters of the show. We love coming to you every single week. And we'll wrap there. Thanks very much. See you next time.
Thanks, Ben.